Welcome to Wealth Up, a channel about personal finance and building wealth. I am often recommended content on how to save money, on Instagram and on YouTube. Many creators share how they budget and control how they spend their money. And I'm glad that this content exists. Budgeting, or as I like to call it, to have a financial plan, is critical for building wealth. However, we should also talk about one of the critical steps in building wealth, and that is investing. It is critical to live below your means and not spend more than you can afford, but saving alone will rarely be enough to build wealth. Saving money and putting it in a savings account will not help that money grow. In fact, banks pay very low interest rates. And with the current inflation numbers, those dollars are losing purchasing power every day. Instead, what is needed to build wealth is to invest the money you are saving. Put that money in a different location where it can grow at a faster rate than 0.01%. In this video, I'll share how I am investing and share my real numbers. The first thing I do is max out my employer-sponsored 401k. This is a type of account that lets me invest for my retirement. My employer also offers a 5% company match, meaning I get 5% of my salary every paycheck added to my 401k from my employer. Basically, free money. I will also admit that I do not have my investments in the automatic target date fund. The reason is that the target date fund had too high of an allocation for bonds. This is in my opinion. I am still a long ways away from retirement, and I want my money working the hardest for me. Instead, I have the money going into a broad market exchange traded fund, or ETF for short. This is not financial advice. This is higher risk than what is recommended. But in being transparent, I wanted to share that detail. For 2022, my 401k contributions will be $20,500, and my company match will be around $7,500, bringing my total 401k contributions to $28,000. I did not start out by maxing out my 401k. It has taken me several years to get here. However, I did make sure to always meet the minimum criteria to obtain the company match. As I said, it's free money. The second investment is participating in the employee stock purchase plan that my company offers, which is ESPP for short. The offerings can vary depending on your employer. Look at the details of your plan if you have access to this benefit. For me, this means that I get to buy the company stock at a 15% discount. The stocks are vested immediately after purchasing, meaning that I can sell the stock as soon as the program purchases the shares. My employer has a ceiling on how much of your salary you can invest, and for me, that is about $15,000. The program will take $15,000 and buy the stock with the 15% discount. In this scenario, the stock is actually worth about $17,250. Note that this is the worst case scenario. If the stock price has increased during the contribution period, the stock could be worth a lot more. I won't go into detail here because all plans are different, but if you are interested in hearing more, leave a comment down below. As soon as the shares hit my account, I plan to sell them. Take all the money and invest everything into an ETF. The reason for this is diversification. I don't want to keep so much money in the hands of only one company. Again, not financial advice, just being transparent on what I do. Also note that there are tax implications for doing what I described. I will have to pay taxes on the profits from selling the company stock. This brings the total investments from the ESPP program to $17,250. Both of these investments are taken out of my paycheck automatically. This is before the money hits my bank account, so I am never tempted to spend this. It makes it easy for me not to have to think about it. The third type of account that I invest in is a traditional investment account. I have a Vanguard account, an M1 Finance account, and the controversial Robinhood account. I have automated investments set up for M1 and Robinhood. $1,000 per month to M1 into a pie that I made, and $500 per month for Robinhood. This brings my automated investments to $1,500 per month, which is a total of $18,000 for the year. In addition, based on my financial plan for the year, I plan to invest more throughout the year based on how my month's spending went. I expect to invest an additional $5,000 for 2022. This brings the total for traditional investment accounts to $23,000. In summary, for my 401k, the total investment is $28,000. For my ESPP, the total is $17,250. And for my traditional investment account, the total is $23,000. Adding these up brings a total to $68,250. This is my target investment number for 2022. Again, I didn't start here with such high investment numbers. It took me several years to figure out my spending and where and how to invest. I am sharing my plan to share with you how I think about the process and also to help to keep me accountable. Don't compare your numbers to mine. You may think I am investing more than you can, or that I am not investing enough. The thing to keep in mind is to focus on your plan. Personal finance is personal, and the plan you make should be keeping your situation and priorities front and center, not someone else's, especially not a stranger on YouTube. As always, thank you for watching until the end. Remember to hit the like button if you have enjoyed the content, subscribe to the channel, and turn on notifications so you don't miss any upcoming videos. If you want to see regular content, you could add me on Instagram at wealth_up. Thanks again for watching, and I'll see you in the next one.